In the metals quadrant, taking a look at the July copper contract, which had a bad week. Its third down week in the last four. And as I mentioned, it was a bad week. It was down over 3%. As a matter of fact, two of those three down weeks in the last 4 weeks were down more than 3%. We were actually up 1.71% today on the highs and finished up 1.33%. We were 4.5395 on the high price in the July copper, 4.522 toward the settlement. That ended up being up, as I mentioned, about 1.33%. The downside, down 58 basis points, but even with such a strong day, we ended up with a down week. And again, 3 of the last 4 weeks are lower down. Now, Chinese demand is starting to show weakness. We saw that in what's called the Chinese premium to copper, which shrank, which means there isn't this rush within China to buy copper. Now, it can be made up by other countries, specifically the U.S., if they would pass an infrastructure deal, would actually make up the perceived weakening of demand in China. And also, the Chinese demand could pick up, but it's not likely to do it this time of year, as there's a little bit of seasonal weakness in copper, which is tied to China having seasonal weakness and then their demand weakness falling on top of that. So all of that has led to a little bit of a drop for probably the hottest commodity, maybe other than lumber, than we've seen in the last few months. Crude oil seems to be picking up a little of the slack, getting up near $70 on WTI today, but copper seems to be weakening. Now, the US dollar weakened today, which could put a little bit of a floor in on copper. Yesterday, we got a strong move in the US dollar. Today, it weakened with the poor non-farm payrolls number as yields fell from 163 in the 10-year yesterday to 156 today, from 230 in the 30 to 224 today. That could potentially put a floor in for copper. We'll have to see how that plays out next week as a bunch of inflation data and a bunch of economic data hits the tape next week.